look, we are ending the week with a bit of action in markets. Look, probably the most volatile markets we've got at the moment is in precious metals, gold and silver. We did mention at the beginning of the week that the precious metals had open bid and not to be short, and especially with silver. Silver was testing $35, which was like a 10-year high, very big technical level. And finally last night silver popped through $35 and it spiked aggressively all the way up to $36 and it's trading Asia now just sub that. So big move in silver, and no doubt a lot of the silver bulls have been cheering. They've been waiting for this break for a long time. But record highs are still all the way up to $50, so still a long way to go. But look, it's very important that, especially for the silver bulls, that silver today, on Friday on the close, that it actually closes above $35, and that it doesn't close below, because if it does, then potentially it looks like a false break. So certainly to keep the positive bullish momentum, the higher the close above $35, the better. And then further out, no doubt, silver traders will be looking for targets up towards $40 in the short term. And gold yesterday, it did also do a good move north. We went and made highs above 3,400, before seeing a bit of a retracement. Now, if you are trading gold, obviously this weekend, it's probably not a good idea to go short gold into the weekend. You do have gap risk with the fact that potentially something could happen with Russia and Ukraine. We still haven't seen a real big response from Russia, so I'd suggest not to go short gold over the weekend, just in case something happens. So yes, but gold, silver, precious metals are obviously a good, one of the better trades in markets at the moment. They're doing exceptionally well. Okay, moving along. Last night we did get some news, some headlines that Trump and Xi have been talking. They had a phone call last night, 1.5 hours, which was a surprise that it came this early, this phone call. Now, anytime these guys talk, the two most powerful men in the world, and they did talk just only about trade issues. So market obviously views that as a positive. So it did, basically lift risk sentiment when those headlines hit. But the market didn't aggressively buy it, just for the simple reason that there was no specifics, no details, nothing substantial, came out of it with respect to progress on a deal. But looks like they have invited each other to China and to the US to visit, and they've agreed to that. So certainly it looks as if it is at least moving in the right direction. We did have an ECB meeting last night. They did cut the deposit rate by 25 basis points from 2.25% to 2%. Now that was expected, so nothing. Market didn't really move too much on that, but what we did find out from the ECB is that it looks as if after 8 straight meetings of cutting rates, that they're finally hitting the pause button and are going to allow those rate cuts to do their work before maybe they look to cut again. Market was looking for maybe the terminal rate to be down towards 1.5%, so for another 2 cuts. So the fact that maybe that might not happen anymore. We did see Euro pop up towards 115 before that retraced a little again. I'd suggest that 115 is a big technical level, psychological level. Might need a bit of work to before Euro gets through that, but we are seeing US dollar selling across the board on the back of that we're starting to see some weaker US data come through. The other big news that we did see yesterday is that the fallout between the divorce between Trump and Elon Musk is getting ugly. Elon Musk did leave the White House a week ago, and ever since then he's been very critical about Trump and his big beautiful bill that he's trying to push through Congress, and in that bill obviously there are some very big tax cuts and spending, and over the course of the next 10 years potentially will add about $5 trillion to the US debt. US debt is at $37 trillion at record levels. The maths is just wrong. Elon Musk is obviously, that's what he's critical about, is that the government should be doing the complete opposite, that it's fiscally irresponsible. Anyway, Trump has come back and basically said to Elon that Elon, he was getting tired of Elon at the White House, that it was his decision to let Elon go, and that he's also cut subsidies for EVs, government contracts for Elon and Tesla, and then Elon responded with a bombshell saying that the reason the Epstein files have not been released is because Trump is on them. So this has got super ugly. Tesla shares absolutely smoked. Seeing Tesla down 16% on the back of this fallout happened overnight. One of the biggest losses for Tesla and Elon in a single day. He's lost up towards 30 billion plus overnight, and that took equity indexes lower with it. That was something that the market didn't expect, this huge fallout, and no doubt that that will continue. We're going to see more headlines, no doubt, from both of them. Finally, we have some very important economic data to end the week. That's non-farm payrolls. Now, the market is expecting about 130,000 for the headline print unemployment rate to remain steady at 4.2%. We did see ADP report on Wednesday, and that came out sharply lower. ADP is a precursor a lot of the times to maybe what to expect with payrolls. So the market is now starting to think that we're going to see a weak payrolls print, and potentially at risk that the unemployment rate will basically rise up to 4.3%. Look, no doubt if we do see a weak payrolls print, you're going to see US bond yields lower, and you're probably going to see some aggressive US dollar selling to end the week. Equities may also, on the back of that, be weaker as well. So yes, we're going to finish the week with some action on this US economic data. So look, good luck with your trades, and we'll catch back in with you next week.